another short setup video for you. This is an ASX listed company, Flexigroup, ASX code FXL, and the period of time we're looking at here is again the first 6 months of 2009. You can see the calendar there, and what we've seen previously with this company, if I just move back, is like so many companies throughout 2008, very strong falls, and now a period of consolidation, a lot of sideways movement. And if we move to current day now, what we've seen in the last 6 months or so is very solid medium-term uptrend, higher peaks, higher troughs, as you can see my mouse through moving there. But of real interest is what we're seeing over the last couple of months, because what I see here is a classic head and shoulders pattern forming. It's certainly not complete yet, because the key level for my head and shoulders is really through this area here, around the 65-70 cents level, because that's what's known as the sort of this key level through here, the bottom of the two troughs in between the necks there, so to speak. But you could really see this trade or this particular stock going either way, because we've certainly seen a tendency for it to just hold here, and it's a very similar level to this previous peak over here. Now you could quite easily see this reversing here, heading back down through this key level of 65 cents and back down here. And if we did see that, that would in fact of course confirm our head and shoulders pattern, where we have the head here and the two shoulders here, and that would confirm the pattern. We wouldn't take action until it certainly broke through that key level where the yellow line is, because right now all we're seeing is the fact that we have a higher peak, a higher trough here, and we're hoping of course that this continues to move in this favour up here, in this direction up here. And if it did, what we're looking at right now is, you know, maybe standing out as a head and shoulders pattern, of course, would just dissolve to nothing, and we'd be just simply continuing along our medium-term uptrend. Now, of course, there's two ways you can trade this, because in a medium-term sense, some people will wait for this 90-cent level here to clear, because they want just that one final step of confirmation that we are in fact continuing in our medium-term uptrend. That's a pattern, or I guess a formation known as a CAP, C-A-P-P, because we would have a close above the previous peak. And if we have a close above the previous peak, we are continuing with our higher peaks, higher troughs theme, and therefore continuing in the medium-term uptrend, and therefore really who knows how much higher this stock can go, but it's certainly heading in the right direction. Others will ignore the 90-cent level, that previous peak, understanding that we already have a higher trough through here, and I'll just get rid of that first line to avoid any confusion. We have the previous trough. The next trough is a higher trough. Here's your higher peaks. In other words, we feel confident that this is going to continue in its medium-term uptrend. Therefore, we may not wait for this 90-cent level to clear. We can get in now at 85 cents, just that little bit cheaper, right in the middle of the upswing here into the medium-term uptrend, and enjoy the ride up. Now, of course, those who wait till 91 cents probably are entering into a higher probability trade. Yes, they may miss out on 6 or 7 cents or so from someone who might get in earlier, but it's fair to say that when you do get in here, if you do get in on the break of the 90-cent previous peak, there is a greater probability that this trade is continuing along its medium-term uptrend, as opposed to getting in down here. So just back to if we went short, if I just sort of straighten this sort of line up here to identify these key troughs down here around the sort of 66, 67 mark, and why this is significant. Because if this stock continued back down here, you know, these 2 points in time here, we've seen key support being offered to FXL, in that, you know, these price levels were formed, they turned there because that was the point at which the demand overcame the levels of supply for this stock. So all throughout this run here, we've got you know, quite aggressive supply of stock, but at this point in time, right down here, it's where the shift occurred, the change in sentiment. We have now demand overcoming the levels of supply and pushing the price back up. When the price moved back down again to that similar level, where we've seen previously levels of support there and people very keen to buy, when it bounces off that, a very similar level to here, that reinforces the significance of that level, in that we know just over the last month or so this stock has experienced a great deal of support. at that particular level. Therefore, if this price was to trade back down to here but then break through this level, we know that whatever support was afforded it during this period here and really kept the momentum going and the medium-term uptrend going, if the stock traded down to here, whatever support was there, of course, is no longer there. Whether it's people changing their minds and cancelling their orders or not deciding to get in, or whether the people who own the stock are also feeling that little bit pessimistic and bearish about this, so they also decide to add to the selling pressure. Whatever reason, we never know for sure, of course. Whatever reason, if the stock breaks back down through that key support level there, you could quite clearly see that this stock heading all the way back down to previous key levels, 35, 40, 45 cent, probably 45 cent level being a key level. You could easily see the stock trading back down there. It would complete the formation of the head and shoulders pattern, really good strong reversal, medium-term reversal pattern, sort of a slight variation on a double top. But you could certainly see it moving back down there. Just a simple identification of that key support level. Now, with this in mind and what we've seen over the last 6 months, you would have to say that probability-wise, you would have to perhaps draw this line back up here because with the influence and power and momentum behind trends, with this already in place and having moved well for the last 6 months, you would have to say there's a far greater chance of this breaking through 90 cents and continuing rather than turning down and completing that head and shoulders pattern and breaking to the downside. But as I said, just not unique, but a sort of different example where you could really trade this either way and you're really just waiting for one thing to happen. If it broke to the downside, you'd be pretty confident of trading short. If it broke to the 90 cent level and beyond, again, you'd be equally confident trading long.